Oh, this is Will Allen with Centera Capital. Well, we are in the swing of the holiday season, as you can see here, and hope you are having a great start. Your holidays are off to a great start here. We got a lot of great things coming to you in the next few weeks as we lay the groundwork today for our 2024 outlook. But there's a lot for us to cover. Let's get into it. Now, before I get into the market update, just a reminder to like, subscribe, comment, share, and hit the notification bell. Make sure that's on. You'll be glad you did. Now, let's start by talking about the markets. And last Friday, markets actually closed, the stock market closed at its highest level of the year, both for the NASDAQ and the S&P 500. This has been a good stretch for the markets. We talked a lot about the seasonality factor back a couple months ago that, November, December is normally the best stretch of the year for the markets, and so far it has played out that way. Now, one of the things powering the markets is that the economic data continues to be really strong. Let's look at something that's called the Red Book Sales Index. It basically takes a look at retail sales. The consumers are out and they're spending right now, doing their holiday shopping. And if you take a look at this chart, what you will notice is that the week ending November 25th which is the last week at this point for which data is available. Notice that sales grew at 6.3% over this time last year. And note, it is not just what sales have done over this last week. Notice just in general, the last 3 or 4 months, that sales has been up 3.5%, 4.5%, 5% over year, whereas you can see earlier in this year, that was not the case. In fact, in July and early August, you actually had sales decline year over year for a little bit of the time. So that is good news that the consumer is spending. Now, one of the reasons that consumers can spend is because the jobs picture is still really, really strong. And we've seen for many, many years that when a U.S. consumer is employed, they are going to spend money. So let's go back to some charts we've put up a couple times this year to kind of check in on the jobs market. And the first is how many people on a weekly basis are claiming and filing for unemployment insurance. And what you'll notice here is that you had this big decline from the early days of COVID when there were a lot of people laid off. You had this big decline in initial claims. But notice that from early 2022 through basically where we are today, which is 218,000 people filing for unemployment insurance, notice that this number has stayed relatively flat, meaning there is not a surge in layoffs taking place. Coming into 2023, when a lot of economists believed that a recession was here or a recession was imminent, they believed that this number was going to grow to 250, 300, 350, 400,000 people filing unemployment claims insurance on a weekly basis. But you'll see that just has not taken place. Claims have stayed pretty much flat all year long. This is really a positive sign. Now, the second chart that I'm going to put up for you here about the jobs market is for job openings. And what you'll notice here is that there are 9.5 million job openings right now. This is much, much higher than what the trend was back in 2014 through 2020 when it was at 7 million and less job openings. So although 9.5 million job openings now is down from the peak of about 12 million job openings, and by the way, that was something that the Fed Federal Reserve targeted when they began raising interest rates a year and a half ago. They said, we want job openings to come down. And you can see that job openings have come down from 12 million to 9.5, but they've stayed at much higher levels than was the trend pre-COVID, meaning if someone wants a job today, they are still plentifully available. And so that is really good news for the consumer. Let's shift gears now and talk about the second reason that we believed coming into 2023 that it was going to be a good year for the economy. And that was that the consumer's balance sheet came into 2023 in really good shape. So one of the charts that we've showed you for a couple years deals with this concept of excess savings. And so if you look at this chart, you will see that coming into 2023, there was about $1 trillion on consumer checking and savings accounts at banks, over and beyond what they had there pre-COVID. And so we said this is going to fuel consumer spending. And you will see that they have spent down some of this money. And right now, the BEA, the Bureau of Economic Research, basically just did a revision about 2 months ago and moved this higher than what they had previously said it was, meaning that consumers have more today in their checking and savings accounts than what was previously estimated. And so this is still good news in that there is still about $500 billion remaining on consumers' balance sheets to go towards spending. Now, I must say that in 2024, this number will eventually be spent down. So there's going to come a point where this is not available anymore. And this was something that did fuel consumer spending in 2023. So it's something that we're going to watch next year. It's not going to be as favorable as it was in 2023. But overall, the good news is, as we're here in December, consumers are still spending. They still have a really great jobs picture, and their balance sheet still is much better than it was pre-2019. Now, the last point I want to go over with you today revolves around the question of this year. There have been multiple wars going on. There is the conflict that is taking on in the Middle East that's going on. And a lot of people wonder, hey, how are stocks at their high point for the year right now? So look at this chart that looks at pre-tax profits for corporations in the U.S. Now, these are both publicly traded and non-publicly traded. And look at this, and what you will notice is that for this last quarter, we will get data for the fourth quarter in January, but for the last quarter, corporate profits were at $3.3 trillion, an all-time high. Now, the reason I mention this is that the stock market trades off of, at its core, and in the long run, it tracks the trend in profits that companies are having. And so the fact that corporate profits are basically right at an all-time high right now is the reason that the stock market can be at its high point of the year with so much uncertainty in a lot of different areas. So this is a positive, again, because if corporate profits can continue to make new all-time highs as we go into 2024, then the stock market can move higher. Right now, analysts are projecting, by the way, that for the S&P 500, that profit growth is going to grow at next year at about 10%. We'll see if they're able to reach that. We are of the expectation that it may end up coming in a little bit less than that. A lot of times, the numbers come down a little bit from where analysts think they're going to be at the start of the year. But right now, the good news is because profits are so high right now, that can support stocks moving higher like they have these last couple months and like we hope happens going into next year. Now, I'm going to wrap with this saying, expect from us in the next couple weeks our 2024 outlook. We hope you find that very valuable. And again, please like and subscribe to this video. If you have a family member or friend who is not happy with their advisor, don't hesitate to forward this on. We'd be more than happy to have a conversation with them and see if they may be a good fit for us. Again, we're in December. Happy holidays, and we'll talk to you soon.